All right, so let's dive into something pretty interesting that's happening in the markets right now.
Yeah.
We're seeing this thing called a market melt-up,
Oh, yeah.
where the overall market is hitting record highs, but
Right.
it's not as straightforward as it might seem.
Yeah.
The big question
Uh-huh.
is this surge sustainable, or are we on the verge of a major shift?
Well, it's a bit of a puzzle because this record-breaking market that we're seeing
Right.
is being fueled by a small group of mega cap tech companies.
Okay.
Think Apple hitting a new all-time high.
Wow.
Tesla with incredible gains.
Yeah.
And the usual suspects like Meta, Microsoft, Alphabet, and Amazon all surging.
It's like they're carrying the entire market on their shoulders,
Yeah.
even though a lot of other sectors are actually down.
Exactly. And that's where the melt-up gets interesting.
Okay.
These companies, while powerful, only represent a small slice of the total market.
Right.
Yet they have this outsized influence on major indexes.
So it's not necessarily a broad market rally,
Right.
but rather a select few pulling everyone else along.
Exactly.
And what's fueling this incredible run for these mega caps?
Right.
Is it just investor hype, or is there something more fundamental at play?
Well, there are a few factors converging.
Okay.
First, you have the anticipation of another Federal Reserve rate cut this month.
Ah,
Right now, traders are giving it a 3 in 4 chance,
wow.
especially after the recent comments from Fed Governor Christopher Waller.
Okay, so if the Fed cuts rates, that usually makes it cheaper for companies to borrow money,
Right.
which can boost growth and, in turn, stock prices.
Yeah.
But are we guaranteed another rate cut?
Not so fast.
Okay.
The Fed is very data dependent.
Right.
They're going to be watching key economic reports coming out this week,
No.
especially jobs data and inflation readings.
Yeah.
Those numbers could easily sway them to hold rates steady instead of cutting.
So buckle up, everyone, because those economic reports are going to be major market movers.
For sure.
But here's what I find really fascinating.
Yeah.
While tech is stealing the spotlight, a lot of other sectors are actually struggling.
Yeah.
Real estate and utilities, for example, took a hit today.
Okay.
What's going on there?
That's a great observation.
Yeah.
And it could be a sign of investors starting to shift their focus.
Okay.
Remember when interest rates are expected to drop?
Right.
Investors often move to what's called risk-on assets,
Huh.
things that do well when the economy is booming,
Right.
but can be volatile.
Yeah.
That might explain why they're flocking to tech stocks,
Okay.
which are seen as high growth but also riskier.
So the potential for a rate cut could be pushing investors towards tech, while concerns about the economy or higher interest rates down the line
Right.
might be pulling them away from sectors like real estate.
Exactly.
Interesting.
And we're also seeing some interesting individual stock movement that highlights this potential shift. For example, Stellantis, the automaker,
Right.
saw their stock drop over 6%
Wow.
after their CEO resigned.
That's a significant drop.
Yeah.
And it shows how individual company news can also impact investor sentiment, even within a sector.
Absolutely.
Yeah.
And then you have Intel,
Right.
which is interesting because it ties into another sector that's worth watching closely, semiconductors.
Okay, so Intel saw their stock initially rally after announcing their CEO's retirement,
Yeah.
but then it ended the day down.
It's a mixed bag for the semiconductor sector overall.
Oh.
On one hand, there's optimism that U.S. trade restrictions on China might not be as harsh as initially feared, which gave the sector a boost.
Okay.
But then you have Intel navigating the CEO transition.
Right.
And the fact that their stock ultimately dipped raises questions about their future.
So there's a lot of uncertainty surrounding Intel and the semiconductor sector as a whole,
Yeah.
even with some positive developments.
Right. And this brings us to another important piece of the puzzle.
Okay.
Small cap companies.
Uh-huh.
Remember, we've been focused on these mega cap giants.
Yeah.
But what about the smaller players in the market?
Right.
Are they being left behind in this melt-up?
Well, I've been keeping an eye on the Russell 2000,
Right.
which is a popular index that tracks small cap companies,
Uh-huh.
and it's actually been showing some signs of life lately.
That's a really important point.
Yeah.
While everyone's attention has been on these mega caps,
Uh-huh.
the Russell 2000's performance suggests that smaller companies are starting to catch up.
So is this a sign that investors are starting to look beyond the mega cap craze
Yeah.
and maybe find opportunities in companies that haven't already skyrocketed in value?
It could be. You see, as those mega cap stocks get more and more expensive,
Right.
their valuations start to raise eyebrows.
Yeah.
Investors might be thinking, okay, these companies are great, but have they gotten a little too pricey? And that's when they start looking for value elsewhere.
Right.
Which often leads them to smaller companies with the potential for big growth.
So maybe this market melt-up isn't just about a few tech giants after all.
Right.
Maybe it's the first act, and the second act could be all about these smaller companies stepping into the limelight.
That's definitely a possibility, and it reinforces the idea that diversification is key.
Yeah.
Having a mix of large and small companies in your portfolio can help you weather different market conditions.
Absolutely.
Yeah.
Now let's shift gears a bit and talk about some of the economic data that's coming out.
Okay.
Because remember, the Fed is watching this data closely as they decide whether or not to cut rates again.
Okay, right.
And one sector that's been on everyone's radar is manufacturing.
Yeah.
It's been struggling, but there are some signs of life emerging.
Right. The latest ISM Manufacturing PMI, which is an index that measures the health of the manufacturing sector,
Right.
is still indicating a contraction, but it's showing signs of a potential turnaround.
So not out of the woods yet, but maybe a glimmer of hope.
Exactly. And another positive sign is construction spending,
Okay.
which actually exceeded expectations last month. This is particularly interesting because it suggests some resilience in the housing market, despite rising interest rates.
Okay, so we've got some mixed signals from the economy, manufacturing showing signs of a turnaround, construction exceeding expectations, but still some underlying weakness.
Right.
And of course, all eyes are on Friday's non-farm payrolls report,
Right.
the big jobs report,
Yeah.
for further clues about the economy's health.
Absolutely. That jobs report is going to be a major market mover. It's going to give us a clearer picture of what's happening in the labor market,
Right.
which is a key indicator of the overall economy.
And remember, the Fed is watching this jobs report very closely.
For sure.
A strong report might make them hesitate on a rate cut, while a weak report might push them towards easing further.
It's going to be fascinating to see how that jobs number impacts the market and the Fed's decision on interest rates.
Right.
But beyond the raw numbers, what's particularly intriguing is the underlying story.
Okay, unpack that for us. What's the story behind the numbers?
Well, we have to look at other data points like the JOLTS report, which measures job openings,
Okay.
and the weekly jobless claims numbers.
Right.
These have been consistently low, which suggests something interesting. The softness in the labor market might be more about a lack of job openings rather than widespread layoffs.
So companies aren't necessarily firing people,
Right.
but they're also not hiring as aggressively as they were before.
Precisely. And that paints a different picture of the economy's health.
Yeah.
It suggests a more cautious approach from businesses, perhaps waiting for more certainty before ramping up hiring.
Oh, that makes sense.
Yeah.
Businesses are probably watching the Fed closely,
Right.
trying to figure out what's going to happen with interest rates
Yeah.
before they make any big hiring decisions.
For sure.
So a lot of moving pieces, a lot of things to watch.
Yeah.
But let's bring it back to our listener.
Okay.
What does all of this mean for their investments?
Right.
We've got mega caps surging, other sectors lagging economic data, sending mixed signals,
Yeah.
and the Fed keeping everyone on edge.
Right.
What's an investor to do?
That's the million-dollar question, isn't it?
Yeah.
And it's important to remember that investing is a personal journey.
Right.
There's no one-size-fits-all answer. But what we've seen today highlights a few key takeaways.
Okay.
First, diversification is crucial.
Having a mix of large and small companies, different sectors, even different asset classes like bonds can help you navigate these market shifts.
Exactly. It's about not putting all your eggs in one basket, especially when one basket, like mega cap tech, seems to be driving the whole show. And second, this market melt-up, while exciting, really emphasizes the importance of understanding what's driving those gains. Is it solid fundamentals or just speculation?
Because if it's just speculation, that bubble could burst, and those high-flying stocks could come crashing down.
Right, and that's why it's so crucial to do your research. Look beyond the headlines and understand the factors influencing different companies and sectors.
So we've talked about diversification, doing your research. What else should our listener keep in mind as they navigate this market?
I think it's important to remember that while it's fascinating to track the S&P 500 and analyze the Feds for husband, every word investing is ultimately a personal journey.
It's about understanding your own goals, your own risk tolerance, and your own time horizon.
Exactly. And that might mean taking a different approach than what the market seems to be dictating. For example, while everyone is chasing mega cap growth, You might find more value in exploring overlooked sectors or smaller companies with strong fundamentals.
So it's about finding those hidden gems, those diamonds in the rough that align with your individual investment strategy.
Precisely, and that requires digging deeper, doing your research, and not being afraid to go against the grain. It's about being an active participant in your financial future, not just a passive observer of the market's ups and downs.
So as we wrap up this deep dive into the market melt-up, remember, it's not just about riding the wave. It's about understanding the currents, the tides, and charting your own course to reach your financial destination. We've given you the insights, the tools, the questions to ask. Now it's your turn to dive deeper and explore what this market means for you. And who knows, maybe you'll discover some hidden treasures along the way.